Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 22nd, 2025, and we're diving into Washington Trust's second quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Washington Trust, the oldest community bank in the nation, has just released its Q2 2025 earnings report, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the financial highlights. Washington Trust reported a net income of $13.2 million, translating to an adjusted EPS of 68 cents. John, how does this compare to the previous quarter?
Washington Trust has shown a solid performance this quarter. The net income increased from $12.2 million in Q1 2025, and the adjusted EPS of 68 cents beat the analyst's forecast of 63 cents. This improvement is largely driven by a 2% increase in net interest income, which reached $37.2 million, and a net interest margin expansion to 2.36%.
Non-interest income and expense analysis. Non-interest income and expenses are crucial for banks. How did Washington Trust perform in these areas?
Non-interest income was $17.1 million, down from the previous quarter due to a one-time gain in Q1. However, when adjusted, it actually increased by 9%. Wealth management revenue rose by 2% to $10.1 million, and mortgage banking revenue saw a significant 32% increase to $3.0 million. On the expense side, non-interest expenses decreased by 13% to $36.5 million, primarily due to the absence of a pension plan settlement charge that impacted Q1.
Asset quality and loan portfolio. Asset quality is always a concern for investors. How is Washington Trust managing its loan portfolio?
Washington Trust's total loans increased slightly to $5.1 billion. Non-accrual loans rose to $26.1 million, which is a concern, but the provision for credit losses was reduced to $600,000, indicating confidence in their loan quality. Past due loans also increased to $14.0 million, but the overall asset quality remains stable.
Capital and dividend strategy. Let's talk about Washington Trust's capital position and dividend strategy. What can you tell us, John?
Washington Trust's shareholders' equity increased to $527.5 million, and they declared a quarterly dividend of 56 per share, consistent with previous quarters. Their total risk-based capital ratio stands at 13.06%, well above regulatory requirements, and the book value per share improved to $27.36, reflecting a strong capital position.
CEO's perspective and future outlook. What insights did CEO Edward O. Handy III share about the company's performance and future?
CEO Edward O. Handy III emphasized the strength of their diversified business model, which has driven positive results across net interest income, wealth management, and mortgage banking. As they approach their 225th anniversary, the focus remains on providing exceptional full-service banking. The outlook is optimistic, with a commitment to maintaining strong capital and delivering value to shareholders.
EPS forecast and analyst consensus. Analysts had forecasted an EPS of 63 cents. How did Washington Trust's actual performance compare?
Washington Trust exceeded expectations with an adjusted EPS of 68 cents, beating the forecast by 5 pence. This beat was achieved despite a challenging economic environment, showcasing the bank's operational efficiency and strategic focus.
Key takeaways. In summary, Washington Trust delivered a strong performance in Q2 2025 with net income of $13.2 million and an adjusted EPS of 68, beating analyst expectations. The bank's strategic initiatives and robust capital position bode well for future growth. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Washington Trust's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Washington Trust performance in the comments below.